Hey, what's up guys? Welcome back to the channel. I know I've been gone for a very long time. I'll get into a separate video as to why I left quite a bit, but for anybody that's new to the channel, welcome back. But in today's video, I have something very special to talk about, and that is actually about support and resistance lines, how to properly utilize those to your advantage, and how this will actually make you profitable over time. At least you'll be more consistent, I should say, right? That's not a guarantee. It's all up to you. Everybody's dependent on their own, depending on your own experience and how you actually take this, how you apply it, I should say, right? So again, it's not financial advice. I always have to state that just in case someone tries to sue me and say, I lost all my life savings for some reason. You know how it goes. So anyways, let's get right into it. In today's video, I have right here an example, pretty much a perfect example. I'm currently working with a Won chain, right? This is an altcoin in the cryptocurrency markets. And I'm not going to explain exactly why I'm looking at this, but I'm going to tell you from a technical analysis standpoint how this actually looks like a perfect setup, right? So initially, a lot of time, before, it was kind of just trading within this range right here down, right? It was just kind of trending downwards. But once it had broken out, it started formulating this nice flag pattern, right? It's probably one of the most common patterns that you'll come across in really any market, right? Just because it's known as a consolidating wedge. But oftentimes what I'll find is a lot of people, once they see something going up, they want to FOMO right into it, okay? They want to say, hey, look, this is going up. This might keep going up, right? From this point, like that. So they'll buy in right at the peak of the level. But you'll notice how it actually ends up rejecting that, and that becomes a first strong resistance line. And if you actually see why it rejected that, if you zoom out onto the daily time frames and you guys can see I have this first red line. Apologize for that. You zoom back out into a higher time frame. You guys can see the reason it rejected that was because it was a strong resistance from the previous high, from the last time it had made it all-time low and back to where it had made it high. And you can see that's why it rejected it pretty strongly from that point, because there's just, frankly, a lot of resistance on this area. So that's why we saw it reject there. So you always want to look at those longer time frames and see, where the resistance lines are. You always want to draw those out like that, okay? And secondly, you can see that it rejected it because there's almost like a double top going on right here. First rejection, second rejection, so it ended up going back down. But then what you usually want to do is draw your wedges, okay? So before, the only information we had was this right here, but now we have this information right here. So I was able to draw this trend line out and call that support structure, because you can see how we bounced off of it one time, bounced off of it a second time. And so now that we had these two support structures, you can draw a nice support wedge. And now that we had these two double top formations, we were able to draw this nice resistance line, okay? And as I had not moved it at all, I've actually recorded this video about 5 times now, but during the time period that I had recorded, it was actually moving upwards and trying to attempt a breakout. But without even moving this simple resistance line, it was actually able to give me a general idea that it was actually rejecting off of it pretty perfectly. And so it leads me to believe now that Won chain could even try to retest this right here, and then it could even try to retest that bottom support structure. And so this is why it's always very, very important to try to draw those trend lines, draw those resistance and support structures, because a lot of times, and here's why I'm making this video specifically, is a lot of times I'll catch a lot of entry-level beginner traders, right? They're trying to get into space that'll look at this and say, oh, look, it's already bounced off of it. I think it could go up, right? So they'll end up buying during these areas right here, right? They would start to FOMO as they see the price trying to move up there, and they're like, oh, it's time to get in. But what usually ends up happening, or at least it can happen, is that after it's enough rejection, it ends up trying to go back down, and then they see that it's going back down, so they end up selling, okay? And so if they had no idea of where the resistance or where the support structures are, they would end up making a pretty big loss. But then once they see it go down and they find that there's support there, then it ends up going back up, and they just end up within this back and forth routine where they're just losing money on both ends, selling too early or buying too high, right? And so if you simply utilize these support structures, you simply just utilize this basic concept, all right? Long support, short resistance. Now, is that to say that, you should always short resistance? Not exactly, but usually it means that you should always look out for resistance lines and probably be a little more persistent and try to stay away from it until we see a confirmation breakouts. Okay, so in this instance right here, since we're still at the top of the wedge, it'd probably be best to wait out until it breaks off this current wedge, simply because once it breaks out, pretty much your reward at this point would actually be pretty phenomenal. At this point, it would actually expand to anywhere from a 10%, even upwards to a 20-30% move, right? Which I really do see Yuan Chain doing. But if it rejects here, under the wedge below this black line, suddenly now your risk is very, very high. It becomes 13-10%. And that's assuming that it even holds that support channel, right? And so that's why you always want to long support when it's down here. Reason being is that because now, if it were to retest this, suddenly now you have not only this range to work with, the 11%, but if it breaks out, your upside is pretty much unlimited, right? There's an unlimited upside. But then your stop loss becomes very minimal, right? You can set a pretty tight stop loss of like 1 to 2% there, right? So if in case it does break downwards, you're able to just sell out without losing too much. And that comes back around to risk to reward ratio, which is also a very important concept to understand. So in this case, what I'm going to be looking at here is for Yuan Chain to pull back down to that support structure. I'll probably end up longing it around this area right here, or at least pretty close to it, right? And then being able to set a stop loss that's going to minimize my risk, so something around that area. So in case it does pull back, I'm not going to lose too much, because at that point, if it breaks all structure, then it would probably be safe to say that this thing's going to go down indefinitely, right? In this case, the structures, of course, it's flagging wedge. But I really do think that longing support structures and shorting resistance lines, or at least not FOMOing it into it if you didn't already catch that support structure, will over time make you a lot more profitable. Okay, so let's make another example. I'll pick a random coin here. One I probably haven't looked at in a while. I guess Ethereum Classic. Let's zoom out to the 4 hourly. I guess you can see this right here is a pretty good example, right? So if you look right here, this isn't necessarily a perfect one. There's a lot of areas where it did end up rejecting it, but more or less you guys get the general idea of what it looks like to have a nice consolidating wedge like this, right? So if you would have noticed here, every single time that Ethereum Classic would try to touch this trend line, at least the current trend line right here, it would actually end up pulling back, and it pull back pretty dramatically. But anytime it touched that trend line, that overwhelming upward trend, it would actually kind of bounce right off of it. So if you would have bought in right here and it would have sold off aggressively, then you probably would have been a little bit more scared or more hesitant to try to long this and then miss this entire move upwards. But if you would have bought into the support structures down here, anywhere during these areas, then at that point you would have been more confident to long this, because at that point you could have set a stop loss at any moment. So if you would have bought in right here, you could have set a stop loss right there. If you would have bought in right here, if you look at the overwhelming trend, you probably could have set a stop loss below that, right? And you still would have had a nice tight stop loss to follow it, but without having to risk too much, right? So right here, if you would have bought in around this area, you probably could have set a stop loss right around that area. You guys can see at each single time where you would have bought in, if you would have given yourself just enough leg room, you would have had enough minimal risk and a lot more higher upside reward to try to trade Ethereum Classic here. So I know this doesn't make sense right now, but you would just have to apply this on your own, okay? I think that the more you apply this, I think the more it'll start to make sense over time. So just as long as you draw your trend lines, as long as you're able to be very persistent and try to stay away from a lot of these FOMO structures, you're able to then be a lot more profitable over time. So hope you guys enjoy this quick video. I know I kind of dragged down a little bit, but frankly, I just think this is an important concept, right? So stick to it, to the back of your head. Long support, short resistance, right? If you guys are having troubles probably finding support structures, then just let me know. I'll probably do a different video how I'm able to identify what's the support structure, what's not, because that's also another problem that I find a lot of people that end up doing. So with that being said, I hope you guys enjoy this video, and I'll see you guys on the next one.